talk about cash flow all the time. Cash flow is the most important thing, but yet the most devastating things to a business. Today, I want to focus on explaining what a cash flow statement is, what the importance of it is, how you can use it in your business, and most importantly, give you a step-by-step guide on how to properly read a cash flow statement so that you can utilize it in an effective manner. My name is Scott Pieper. I'm the co-founder and CEO of Mobilization Funding. For the last 10.5 years, we've been working with customers and small businesses of all kinds in construction and manufacturing and fabrication to help them with their exact project cash flows. And today, I want to focus a little bit more on how you can analyze exactly what we do in a project or for a certain customer of yours and how you can look at that over your overall business. All right, section 1. Let's just introduce the cash flow statement, what it is, how to read it, and the 3 most important sections of it. So first, a cash flow statement is really, most simplistically, it is literally just exactly that. It's how much cash do you have, when do you have a certain amount of cash, when do you expect more cash to come in, and how are you going to use that cash? The most important and effective use of a cash flow statement, particularly for your CFO or your owners of your business, is in order to run and operate your business, you need cash. You have to make payments. We got to make payroll, pay vendors, purchase items, all different types of things. And what a cash flow statement will do is tell you where your cash is coming from, how much you have, and then of course where you can use it, and then project what you're going to spend that on. There's 3 main sections. There's operating activities, there's financing activities, and there's investing activities. Let's talk about operating activities first. Operating activities are your normal day-to-day business. The money that's coming in from your customers, that's the money that you have to go out to pay vendors, that's your payroll. Think of it like the operations of your business. Ins and outs of normal business, day to day, week to week, month to month. Payments for debt, payroll, of course, we talked about. Subcontractors, vendors, purchasing normal routine items that you have. It is not your typical purchases like if you're going to buy a large piece of equipment or something like that. We're going to touch on that here in a second. Investing activities is the second section, and that's what I'm talking about when it comes to capital purchases. If you're going to make investments in a piece of capital, like a piece of heavy equipment to help your business operate and function, maybe you've been renting a piece of heavy equipment and now it's time to purchase it. Those are the type of investing activities that are going to fit into your cash flow statement. If you have normal payroll, for example, in your operations, and that's something you can expect week to week or every other week, if you versus buying a $300,000 or $400,000 piece of equipment, that's going to happen maybe once at a certain interval period of time. That's not a week to week thing that's going to happen, or a use of cash. So that's why it's in the investing section. Also in the investing section, you may have a building that you own, and the income from that building that you've invested in, there's a tenant in it and they're paying rent to you. The income from that will flow in through the investing activities as well. So you both will have expenses in the investing activity section, but you also will have income coming through that section as well. And that's the investing section that you can kind of analyze, and we'll get into a little bit more detail. The third is the financing activities. This is cash contributions that are coming from debt sources. For example, you have a line of credit. You can utilize that line of credit on a weekly basis, monthly basis. You're going to draw from that line of credit when you need certain amounts of cash to pay for items right now. But then when you have a surplus of cash, you also may pay that line of credit back down. And the interest associated to the amount of that line of credit that you pay on a frequency of monthly or weekly or whatever the balance of period of time that you're making payments, those items are going to be critical to track in the financing section. Outside of just a regular routine line of credit, you may be raising debt. Maybe you're going to raise equity or debt. Maybe you're going to get an SBA loan for something specific. Maybe you're going to get an SBA loan just to help you operate the business. Those slugs of cash, those larger tranches of cash that you're going to have come into your business at a one-time event, those also would flow into the financing activity section. Those are going to be the things that are going to come in one individual time, and then you have to determine how you're going to use that cash. Sometimes that cash might be working capital, and it'll flow into your operational activity section. But tracking when it's coming in, and then also how you're going to service that debt, those are the types of things that are coming into the financing section. We could go into a lot of detail on that based on the type of loan. Is it a term loan? Is it a line of credit? But for this point of this conversation, I just want you to think of the financing section as money coming in that's not related to your normal operations. And they might be either a one-time event in a big chunk of dollars that are used for like from a loan, like an SBA loan. I want you to think of it like a line of credit that you have access to that you can float back and forth. Now that I've covered the 3 sections, what's critical about a cash flow statement in analyzing the liquidity of a business is if you don't know where your cash is coming from or how you can make decisions on the cash you have, like where you're going to spend it, what you can use it for, how much do you need to project through the next period of time until the next chunk of dollars come in. It's very difficult to operate your business. It's almost as if you just have to live day by day and hope and pray, and that's not a strategy. So the cash flow statement, in terms of letting you know what your liquidity is at any given time, liquidity being how much cash you have on hand, how much cash you can expect to have on hand next week, the week after, a month from now, 2 months from now, where those sources of cash are going to come from, and how you're going to use that cash. That's exactly how you use a cash flow statement to assess at any given period of time what the liquidity of a business is. So let's back up and talk a little bit more about operating activity section. The one piece I did not discuss that I want to point out to you is when you're looking at your monthly financials, most people think of those things, think of your monthly financials in terms of your income statement or your profit and loss and your balance sheet. But a statement of cash flows is also a critical report to look at. One thing we didn't discuss yet that I want to point out to you is where does your net income or your net loss for a specific period, how does that impact you? What a cash flow statement will show you, and particularly in the operating section, it's going to show you how much cash is being generated by the business. You'll see that in your operating section. If your business is running at a loss, then you are actually, normal operations are taking cash out of the business on a routine basis. That's actually not a normal thing. It's not a good thing, but it might happen from time to time. You may have seasonal business. You may have a couple quarters of a business where you earn all of your positive cash flow, and that's okay. You may have seasons or quarters of your business where you actually run at a deficit, and that's okay too. What's important is to understand those ebbs and flows. So in an operating section of the cash flow statement, you're going to be able to see what your net income contribution or your net loss contribution is to your operating cash flow. And that's important because you want to see how your business itself and the operations of it is actually increasing your cash over whatever period of time. That's going to directly impact how much money you make, of course. Well, how much money you make is going to directly impact how much cash you have, but also it will help you to understand the business on a routine basis is generating how much cash that can be used for operations in the business. Why is that critical? If your business operations is generating enough cash, you can forecast on a month-to-month basis when the business will have enough money to do certain things, like purchase equipment, buy a building, or maybe it's just bring on new employees. Maybe it's bring on new customers. All those types of decisions. Then you can assess if you have the ability or desire to borrow money instead. Maybe you can find out that you can make a new acquisition of a building in 6 months based off your normal operating activity. And in 6 months period of time, it's okay that you can wait that long. You don't need the building right now. Well, it would help you a lot to know that in advance if you're deciding whether or not you want to go get a loan to buy the building or how much of a loan. So that's the difference between where your operating activities can help you really understand how the net income component of that is flowing into your business to help you determine whether or not you want to borrow money to make a purchase like that. All right, another point I want to highlight in the investing section of your cash flow statement. This is when you sell or purchase long-term assets. Let's say, for example, you have an opportunity to sell a building and you sell that building. What are you going to do with the cash? That's going to flow into your investing activities. What if you have the opportunity to buy a building and you use the cash? That's going to flow into there. What's critical is when you sell pieces of equipment, or maybe you sell furniture, or you need to buy furniture or computers. It could be of any size. It doesn't have to be a building or a piece of real estate. It also doesn't have to be a big piece of heavy equipment. Sometimes it could just be small purchases. Maybe all your computers, you have 15 employees, and all your computers need to be replaced. So that's a $15,000 expense, $1,000 a computer, right? That you're going to incur. You want to put that into you're going to want to put that into your investing section because those are items that you can depreciate, just like furniture or other items. On the flip side, if you get a new office and you're buying furniture for that office, or maybe you're leasing it, but you're buying the furniture, you have all this old furniture and you decide to sell it. Maybe that generates $25,000. Well, that's money that's going to come into your business. It's not operational cash flow. It's not 25 grand you can expect any given month or quarter, but it is a one-time event. So that's going to flow into your investing section of your cash flow statement. And how you use that cash can then be determined based on what you need it for. Lastly, financing activities. One more point I wanted to highlight. When determining, and every business owner figures this out at one point or another, you need cash. It's time to grow. or you're expanding. Or maybe you had a bad outcome on a project or a certain customer and you lost money, but you know your business is fine, you just need cash. Now you have a choice of decisions. Do you raise equity from others, go out, sell parts of the business and bring in cash? Do you get a form of debt? Maybe it's a long-term note, maybe it's a line of credit. Some period of time you need a bridge of cash that you can access to run your operational side of your business till such time that the operational business can then generate enough net income for you to be able to sustain itself and also service that debt and ultimately pay it back. These are the types of decisions that every business owner or finance professional is going to have to decide for a business. Your financing section of your cash flow statement is going to help you determine this as you utilize these cashes. How much do I need? You look at your operational section, your investing section, and you get to the financing section, which is going to be able to then figure out how much do I borrow. Maybe you decide you want to raise equity. That's great, but how much? Are you raising a couple $1,000,000 or are you raising a couple $100,000? Totally different endeavors, right? If you're trying to figure out, do I borrow a couple $100,000 or do I need a few $1,000,000, depending on the size of your business? Are they going to be long-term notes, short-term notes? What's the implications to my business? How do I service those notes? All of those things are going to be factored into your cash flow. And the financing section of the cash flow statement is where this is going to be determined. Now, I have this fancy picture here for a reason. I wrote a book called The Big Book of Cash Flow. A lot of the stuff I'm talking about here can be found in the book in great detail. And so you can access that book, whether it's on Amazon or off our website. And you can get graphs and charts and cash flow statements and statements of cash flows and how to interpret them and how to read them. You can also download from our website cash flow projections. You can download project cash flow sheets. You can download business cash flow sheets. So at least it's a template. One size does not fit all, and you'll have to do some modifications for your business. But you can get a lot of those things and even more detail about a cash flow statement directly in this book that I wrote, where I spent a little bit more time talking through in detail. But most importantly, you can also go right to our website and download all the tools and activities you want for free if you don't want to buy the book. Assessing your overall cash flow. Now that we've talked about the different sections, and we've touched on a little bit of how money flows in and the ways money can flow in. We've talked about the ways money flows out and the different formats of it. Now we can put it all together and determine what are we going to do with the operating cash flow and a cash flow sheet that can help us drive our business forward. Using the cash that you have on hand to make decisions and what the impact of using that cash in the future is critical. And that's exactly what a cash flow statement is going to show you in terms of the cash you're generating. A cash flow projection then can be utilized based off of that cash flow statement and your income statement and other metrics. But that budget and that cash flow is what's critical for you to be able to assess how you're going to make decisions, and more importantly, what are the impact of those decisions. There's nothing worse in a business owner or finance professional's life where you make a decision based on a certain set of assumptions just to find out 1 or 2 or 3 weeks later that it was the wrong decision, or you didn't account for the certain aspect of the process prior to making a decision, and now you got a new problem you're dealing with. That's what these tools can help you avoid. That's what these tools can help you use to make good informed decisions, and more importantly, that you can make decisions that you can stand by and you can project forward and know exactly where you got. In conclusion, look, we've talked a lot of things today. Cash flow statements as part of your financial assessment every month with your normal financials, income statement, balance sheet. The cash flow statement is going to basically give you how much cash do you have on hand, how much cash will you have on hand based on the decisions you need to make, how much cash will you have on hand at any point in the future based on operational cash flow, how much is your operations of your business contributing to your cash or taking away from your cash, and all of those things are going to help you make better decisions. I hope this video helped you guys a lot. If it did, please share it with someone. Click on the bottom and subscribe. And I look forward to seeing you guys again really soon. Thank you.